Did you realize that selecting the wrong tax preparer might cost you more than a few dollars? It may place you in a world of legal difficulties and financial headaches. It's a jungle out there with dangers and traps around every corner. But don't worry, we've got you covered. Whether you're a first-time filer or an experienced taxpayer, this video will provide you with vital insights and practical tips. So grab a notebook, sit back, and let's unravel the enigma of locating a reliable tax expert. It's more important than ever to be attentive now that tax season has begun. The United States Government Accountability Office advises you to use caution when choosing a tax preparer. Unfortunately, some tax specialists do not have your best interests in mind. A substantial number of Americans seek professional assistance with their tax returns each year. However, not all of these experts will be more skilled than you in terms of tax preparation. Worse, some of them are outright con artists. Ghost preparers are a growing worry, and the IRS has warned us about them through its Dirty Dozen campaign. Dark villains like these can make your financial future a living hell by forcing you to pay fines and interest charges before fleeing with your funds. The most recent and hazardous con artists are the focus of this effort. Unexpected charges, such as unpaid taxes, interest, and penalties, may arise as a result of deceptive identity theft schemes or false claims of big refunds. The major goal of the Dirty Dozen recommendations is to provide you with the tools necessary to spot these hazards. The goal is not only to avoid scams, but also to be aware of the serious consequences of falling prey to them, such as a loss of personal information and money, as well as legal concerns. However, explicitly illegal activities do not constitute the whole. The Dirty Dozen also includes vague areas where taxpayers may find themselves in hot water for what appear to be tax avoidance methods, but could result in criminal prosecution or large fines. These range from overt instances of fraud to more covert examples of someone breaking the law without recognizing it. If you're familiar with the Dirty Dozen frauds, you'll be more prepared to cope with the ever-changing techniques utilized by tax scammers. Having this information can help you avoid complications when tax time comes around. So, what are some things that you need to look at? Be aware of tax preparers who promise big returns, but then charge you based on how much you get back. This should be a caution. Scammers attract you with promises of substantial returns, only to keep a portion of your money. Reliable tax specialists, on the other hand, typically have a clear, fixed-rate structure. Their prices are proportionate to the complexity of your tax return, not your refund amount. Their purpose will be to provide you with excellent service, not to fraudulently inflate your refund, and this way is more transparent and honest. Always use caution when dealing with seemingly amazing deals. Instead of promising you the moon when it comes to refunds, a legitimate preparer would prioritize accuracy and compliance with tax regulations. By law, your tax return must include a legitimate tax preparer's signature and the preparer's tax identification number, PTIN. This is an important step since it ensures that they are held accountable for the accuracy of your return. But the so-called ghost preparers will avoid this. Because they will not sign or include their PTIN on the return, you'll be unable to locate them in the event of an audit or problem. They can evade accountability by employing this tactic, which may jeopardize you. A tax preparer's willingness to sign your return and supply their PTIN should be your first consideration. Paid tax preparers are legally required to use this method, which is also regarded as best practice. If the preparer is hesitant or flatly refuses to sign, treat it as a red flag and seek help elsewhere. If a tax preparer asks you to sign an incomplete or blank form, run the other way. A clear red flag has been raised. When you sign your tax return, you are effectively promising that everything is true and accurate to the best of your knowledge. Incomplete or blank paperwork exposes you to fraud and mistakes. Some dishonest preparers may utilize false information to increase refunds or redirect payments later on. You, not the preparer, will be held accountable because your name appears on the return. Before signing your return, be sure you have thoroughly studied it. Make sure you fill out all of the fields and that the information matches what you already have on file. A preparer who's in a rush or wants you to sign before the return is completed is most likely not looking out for your best interests. There are dishonest tax preparers out there who may attempt to increase their clients' refunds by suggesting that they inflate their clients' deductions or charges. Donations to charity, company expenses, and other tax benefits may all be made up. This may appear to be a straightforward way to enhance your return, but it's actually illegal and could result in some serious fines. If detected, you may face fines, interest, or even criminal charges. You are solely responsible for the accuracy of your return, regardless of whether a tax preparer suggests or submits such false information. Giving incorrect information is something that no competent tax expert would ever advise. Instead, they'll look for lawful ways to enhance your refund as much as possible. Look for a different tax preparer if they persist in including inaccurate information that you know is incorrect. Moving your tax return funds to the preparer's personal bank account is a very alarming practice among dishonest tax preparers. One method they could use to accomplish this is by utilizing your tax return to conceal their own bank information, or by providing incorrect information regarding the destination of your refund. You may be confident that any reputable tax preparation firm will always employ your preferred method of direct deposit or mailing to get your return. If the preparer suggests or even asks that your refund be paid to one of their personal accounts, this is a red flag. Even if they promise to reimburse you later, you won't be able to do anything with the money once it's in their possession. Keep an eye on the destination of your reimbursement. Make sure the bank account information on your return is correct at all times, and request that any refunds be sent to you personally. Untrustworthy tax preparers may request payment in cash, but fail to provide a receipt. Scammers enjoy this method because it's so simple to execute. Payments that can't be monitored make it much more difficult to correlate them with specific tax returns or hold the preparer accountable for their services. Whatever method of payment you choose, a reputable tax professional will always provide you with a clear receipt or invoice. In the event of a disagreement or query, this can be used as proof of your transaction and as a record. A major red flag is if the tax preparer wants cash payment or refuses to provide a receipt. It may suggest a desire to escape accountability and a lack of transparency. You should always keep track of your payments, but this is especially critical when it comes to things like tax preparation services. In order to get their hands on taxpayers' money before the deadline, some dishonest e-filers coerce individuals into signing bogus or incomplete forms. They're crossing their fingers that no one will notice the inaccuracies. However, severe errors can occur when returns are rushed, compromising the return's accuracy and the refund's legality. When filing your tax return, make sure to be complete and exact. This demands your full concentration. Tax preparation firms that prioritize accuracy over expediency would never pressure you to submit an incomplete return. Always remember that the information you include on your tax return is your responsibility. Submitting an inaccurate return may result in IRS penalties, audits, or delayed refunds. Avoid tax preparers who promise a faster refund than the IRS typically provides. The IRS normally issues refunds within 21 days after receiving an electronic return. Tax preparers who promise a faster refund are usually attempting to dupe you into employing their services. If the preparer makes such an outlandish assertion, when you engage with a reputable tax professional, they'll notify you of the average processing times for your return and will not scam you by offering a speedier refund than is realistically attainable. If your tax preparer suggests inflating your refund by fabricating or exaggerating deductions, costs, or income, this should raise red flags. This is a flagrant deception that violates the law. Audits, fines, and possibly criminal prosecution are among the serious consequences of participation in such operations. Any reputable tax preparer will attempt to get you the most money possible while remaining within the rules, and your return should accurately reflect your financial situation. A tax preparer's lack of expertise and ethics will be evident if they advise you to submit false information. Avoid these types of preparers and report them to the authorities. There are dishonest people out there who offer tax preparation services without the necessary qualifications or certification. Perhaps they're trying to hide the fact that they lack the necessary expertise or certification to lawfully prepare taxes. This lack of qualification may result in inadequately prepared returns as well as potential legal difficulties. Check the credentials of the tax preparer before hiring them. Most honest tax preparers will openly display their credentials, such as an enrolled agent, certified public accountant, or IRS preparer tax identification number. If a tax preparer avoids or appears to hide information regarding their education and expertise, this is a red flag that they may not be properly qualified to provide their services. Choose a tax preparer who is open about their credentials and has the necessary authority to do so. Consider the process of choosing a tax preparer to be similar to that of picking a doctor or a financial advisor. Before you make this decision, carefully consider their credentials, competence, and industry reputation. To make an informed decision, use these steps to properly evaluate potential tax preparers. First and foremost, verify their qualifications. If you want to ensure that the tax preparer you're contemplating has has the necessary credentials, such as a CPA, an EA, or an attorney, search them up in the IRS's public directory of federal tax return preparers. This verification validates the preparer's declared legal knowledge and qualifications. Remember that you should not commit your taxes to someone who doesn't have the requisite credentials, just as you wouldn't visit a doctor who has the essential medical qualifications. Next, look at their community standing. On the internet, there's an abundance of information. Look for any complaints or disciplinary actions against them, as well as reviews on the internet. Investigate their past to discover if they have filed any questionable returns. This research can be used to determine their level of professionalism and client satisfaction. It's similar to searching up past patients' experiences with a doctor before scheduling an appointment. It's also critical to understand how they charge for services. Instead of selecting a tax preparer whose fee is based on the size of your refund, search for one with a fixed cost. There's no hidden objective behind fixed fees, and preparers will have no reason to inflate your refund. Always obtain formal pricing quotes before agreeing to anything. And be wary of preparers who provide multi-form discounts. This is a vital initial step, similar to understanding what to expect from a medical procedure in terms of cost and insurance coverage. Conduct a comprehensive interview with the candidate. Inquire about their return reviews, audit support procedures, areas of specialization, training, and experience. Asking them these questions can assist you in determining their degree of expertise and suitability for your specific tax requirements. It's similar to the initial meeting you'd have with a financial advisor to get a sense of their approach and areas of expertise. Check if they are accessible and available. Check to see if the preparer can provide recommendations from former clients and will be available for assistance even after the tax filing season is ended. Any dependable preparation requires a well-established and trustworthy communication channel. This is similar to ensuring that your doctor is available for emergencies or follow-up visits. Finally, recommendations are quite effective. Ask friends, family, or tax professionals in your area for recommendations on a preparer's honesty and dependability. Referrals are similar to obtaining a recommendation for an excellent doctor or financial advisor from a trusted friend or family member. So, that's all the time we have today, folks. Hope you enjoyed this video. Don't forget to subscribe to our channel and hit the bell icon on your way out. We'll see you all next time.